Hi traders, it's Alberto and today is July the 20th, 2015 and I wanted to just go over the Monday retracement because I've been getting quite a few number of emails on how to qualify a Monday retracement trade, and it's actually quite simple. I don't send out signals simply because these trade setups, you have to qualify them, and usually the trade does not happen to the European session, and usually I'm not awake at that time, and right now I happen to be awake. And so let me just show you what I normally do. The first thing I do, I need to count the number of pips on Friday. So we're looking at the euro yen, and the market went down about 93 pips. So that qualifies because the euro yen daily average range is anywhere from 100 to 150 pips. On Thursday, the market put in 109 pips. So it qualifies because on Monday usually is not a continuation pattern. Usually it's a retracement trade. Okay, so that's the first thing I do. The second thing I do is I take my Fibonacci tool and draw it from the swing high on Friday to the swing low of Monday, which is today. And I notice that price is, these are the retracement levels, 61.50, 38%. Most likely price will go up to 50 or 61%, and that would be my target. Okay, so those are two things that I normally do. The more the market has, the more pips the market had put in on Friday, then the more the retracement. Let me just give you, let's look at another pair. USD Canadian. Now, this didn't really move on Friday, but it qualifies. It put in a 60 pips, but it qualifies because price broke below the 8 moving average line coming into the Asian session. I'm sorry, the European session. So I took a trade, but normally I would not take a trade like this because it only put in 60 pips on Friday, but because it qualified breaking below the 8 moving average line and closing below, then I did take that trade, and most likely I'll get out of this trade since it only put in 60 pips. So maybe if I can capture 20 pips, I'd be happy with that trade. Let's look at Euro USD. Same thing, qualify this trade, count the number of pips on Friday, market till Monday's low, that's 87 pips. So it qualifies. It broke above the 8 moving average line. Take your Fibonacci tool, draw it from the swing high of Friday to the swing low, and these are the levels that most likely price will stall out and resume its trend. Okay, so I did not take this trade because it had moved so fast already. The risk reward wasn't ideal. Okay, let me see what else is here. Oh, I took a trade on USD Swiss. So from the swing low to the swing high, 80 pips, and that's about its daily range. Price breaking below that 8 moving average line. Notice also that the stochastics indicator, and I'm sorry I forgot to mention stochastics indicator. Ideally you'd like to see stochastics up here at this 80 level on the 1 hour chart, and price breaking below the 8 moving average line, and that would be your sell trigger. And then I have a target at this level here, which is the Thursday's resistance turn support. So if it can manage to get down to that level, I'd be very happy because that's about 30 pips, I believe. So yes, about 30 pips from where I entered the trade. Okay, I think there's a setup here on pound dollar. The sell off on Friday, 117 pips, and this would be a very good trade to take because If you have any currency that's put in at least 100, 150 pips on Friday, most likely it's going to give back at least 50% of that. And that's what's happening right now on pound dollar. Here's Friday's sell-off, stochastics oversold, price above the 8 moving average line. So on this one, probably the next target would be that swing point, that strong resistance that bounced off several times in the past few days, 156.42. So that's it for this tutorial. Please email me if you have any questions. Remember, it's just a very simple strategy. Unfortunately, if you're not up during the European session, it's difficult to take this trade because by the time you wake up for the New York session, the move has already taken place. Thanks for watching. Have a good trading week.